presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. John, what's going on, brother?
Good afternoon, Tom. How are you?
I'm doing great, man. Yourself?
Good. I want to tell you, I've been listening to you since your radio days back in '99. Appreciate what you guys do. But what I really enjoy that you brought back Tim Ward. This guy is as smart as a whip.
I am so happy for that feedback.
Yeah, because he's one of a kind. He's got to be the number one market timer. I'm telling you, it's like he calls it really, really good.
He does. I really appreciate the feedback, man.
Yes.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on, go Rhodes. Hope everyone's having a great day, safe day. Let's make it a great night, folks. You are what you believe you are. I dig this guy, man. Humans are powerful magicians. You have the power to make yourself what you are right now, but it's not your reasoning mind that controls your power. It's what you believe. Market-wise, let's take a look at it out here. We have the Dow Industrials down 394, NASDAQ off 110, S&P's down 28. They were down 84, folks, okay? Gold contract up $6.60, trading at $2,345 an ounce. You got silver up 7 cents, $27.69 an ounce. Copper up 7 pennies, $4.55 a pound. Light sweet crude up 91 cents, $83.71 a barrel. Notes and bonds. A 10-year note down 11 ticks, trading 107.11. 30-year down 18 at 113.11. And King dollar's down 291 ticks, trading out at 105.565. Euro 107. Yen 155, British pound 125 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. First, I'm going to bring up the future, folks, okay? Because this is quite a day. And bottom line, you had Facebook come out with numbers. Numbers were all right. Guidance was not even close. Zuckerberg could have spent a whole bunch of money. That being said, we went down to 5,022. You're at 5,081 right now. You have a rejection of lower price. You're going to have lighter volume, and all this do is setting up the next leg up in the marketplace, folks. And let me go look at this intraday for a second. Okay, so, bingo. Intraday, here we go. Oh, yeah, we're going higher, man. We're going a lot higher, too. So check this out. So right when I was, well, let's see, the last bar coming down was at 20 past 2. Now, that bar didn't have volume. Compared to, like, see what's going on with this bar right here? 1 second, where's my watch? Okay, so this 10-minute bar here, now you're coming up to the swing. You're coming up to the swing and expanding with volume. 36,000 contracts out here versus the high of 32. This is saying it's going to go break that last high that was established out here. So that's in the ES. We go to the Qs, NQs. Take a look at the NQs. Well, same setup, man. Yep. This is wild. So the NQs got to a low today of 308, 17,308. Right now, you're 250 points higher than that. You're still down 107. That being said, though, this is going to also challenge the high of that 583. And right now, you're at 558 when we take a look at those last digits. Gold. Now, what's really intriguing here with gold, folks, okay, is this. The gold contract's only up $7, okay? The gold equities are off to the races like in a monster way. Well, let's stay with the contract for a second. The contract's up $7.30. You have 212,000 contracts. That's what you need. That's great contract volume. That's saying that, guess what? We're going higher. Now take a look at, though, it doesn't matter what you bring up. And what's going, well, here, I'll bring up Newmont first because this is where it came off from. Newmont came out with numbers last night, or this morning, rather. And bottom line, big numbers, okay? So Newmont's up $5.20. This is an ABC structure up, blowing away the B point, doing it with volume. In fact, when we were talking with Costa yesterday, I was speculating that it was going to be a weekly ABC. It is now a confirmed one. We don't even need Friday. Bottom line is that this is on its way to 57. Right now you're at 43. And what happened here is that the numbers are so large, and it was straight across the board. And it has to do with the aspect of, gold going up so much. That's what it really comes down to. So the bottom line is that, you're going to see all these equities. Like the estimate on Newmont was 38 cents and they made 55. The sales estimate was 3.6 billion and they did 4 billion. Yeah, 400 million more, okay? So it doesn't matter when you bring up. You bring up any of these producers, you can see that the bottom line is that the market is piling in them with volume. The GDX is up $1.27. You get 35 million shares traded. You can take your pick. An Eco Eagle, just you take your pick and go for it. What has happened is that an Eco Eagle's making another new high up here. It's $65 right now. And it's because of the fact that gold and silver and copper went up so dramatically, and then you just multiply that times the amount of ore that they're taking out of the ground. And these companies take a huge amount of ore out of the ground. They just haven't been making, the type of money, meaning $500, $600, $700 per ounce out of the ground that is wide open to make right now. So big numbers, man. We got into the notes and bonds. Now this one gets really interesting. So TY, what I'm going to do first, I'm going to put this generic one up first. See where we're at this 10-year. So you have the 10-year right now down 11 ticks. 2.3 million contracts. There's a lot of contract volume. I just want to see what swing we're going against here. So I'm going to do 50. Oh, I see. Okay, it's only going, it's not even, I see, okay. I see, so we haven't even, we're going against of how we went up. Because the 10-year had made a low out here of 105.10. You're at 107.12. We go to the TLT. This is where this gets interesting. So when you look at the TLT, so you look at the 10-year, the 30-year, they're broken their lows, period, and they have volume. You look at the TLT, and this is giving us a hint that, no, there is going to be a turnaround here, is that the TLT has only done 25 million shares. Yesterday you did 48 million. You rejected lower price today at 87.34. Now, you're only 40 cents above that, but the bottom line, you still rejected lower price, so 87, yeah, and we're going to be inside the range again. 87.78 is the range, and you're at 87.76, Meta came out, and the bottom line is that META, this thing got absolutely smoked, and that gap, I didn't see that gap yesterday. I don't know how I didn't see that gap, because I put up in a weekly, I think. That gap's going to get filled. The gap was, 400. It made 414. Stay right there, folks. Come right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow right now down 347. Nasdaq down 89. S&P's down 22. Now you get Microsoft and Google coming out after the close, folks. So Microsoft, the low for the year is 257. The high is 430. You're trading 398. Oh, look at here. Look at here. This is interesting. Okay, so you broke down. Ooh, look at. This is like it's actually a small ABC down. Let me look at this for a second. 1 second. See, 429. That's $30. That gets you into 380. We hit 388. That's on the daily. The weekly. So the weekly, we came almost right back to where the volume was. Last time volume was 377. We hit 388. Now Microsoft is going to be looking to take to the top line 60 billion, the bottom line 283. So it's a little shy from last time. Then Google, we take a look at Google. They're coming out right after the close. So the low is 106, the high is 161. They're going to be looking to do 66 billion and $1.53. That's quite a downdraft from last quarter. They did 72 billion, but that's probably just holiday shopping, whatever. And then if we take a look at Google, that's rejected lower price today. Put this on a monthly for a second. So in a monthly, you're already broken the 151. The real question is we're going to break it with volume. So 443, 350. Where are we calendar-wise here? Let's see. Calendar-wise, how many more trading days we have? You only get 3 more trading days. Be interesting to see whether we can get that volume up on a monthly. Let's get over to our man, Mr. Tim Ward, as we do every Tuesday and Thursday, folks. And don't forget, you can reach Tim every trading day at ord-oracle.com. That's ord-oracle.com. Tim Ward, what's going on?
Well, actually, let's go look at that Zwag breast thrust indicator.
Ooh, I like it.
Yeah, last October we were talking about the McCullen oscillator. It had to get below minus 300.
Yes.
Then within two, So anyhow, this is kind of a similar indicator, but on a shorter time frame.
Okay.
It doesn't take weeks to kick in. And, this can kick in. Well, actually, it does take weeks. It's 10 days, which is basically two trading weeks. But
yes,
I still think it's got a chance to kick in here. We'll have to wait and see. But anyhow, in a nutshell, again, this is advanced issues over the total issues on NYSE. Then you take a 10-day average of that. So it has to get the indicator started, I guess you might say, you have to hit below 0.40, which it did on, or actually has to turn up from below 0.40, which it did on April 18th.
Okay.
So that was last Thursday. And so now it has to go to 0.6 or higher within 10 trading days, which would be, if you do the numbers, it comes out next Wednesday.
Okay.
So anyhow, today we did hit 0.4, below 0.4 last Thursday, and we got up to, I think, 0.52 or 0.56 maybe. But right now we're 0.48.
Oh, so this brought us right back down. Interesting. Okay.
Yeah, well, today, was a down day, so it affects it's a 5-day average.
Right.
It's a 10-day. Yeah, it's a 10-day average. So down a little bit, but we'll need still a surge here. So put this way, if the market kind of mills around here and consolidates over the next 2, 3, 4 days, you're not going to reach the 0.6.
Yes.
So what has to happen is another strong rally, like coming off that recent low we had here on April 19th. You had to have a kind of a bullish surge in advanced decline line to get that. And so even though we're down today about a third of a point, give or take, advanced decline is about 2 to 1 to the downside, so that's not going to help that number. But we still got tomorrow, Monday, Tuesday, Wednesday for this indicator to kick in, I guess you might say. I think there's still a good chance. If it does do it, then that really opens the door for the bigger trend. And you could see something like the last time this got triggered was basically the October lows.
I know.
And you had pretty much a straight-up rally. And so that's what I'm hoping for. I don't know if we'll get it or not. But either way, there's still not a top of any consequence. But if we do get the ZBT to kick in, it would suggest another powerful rally. Most likely is in the making. So,
exactly.
Now,
Tim, let me ask you: Did Marty have? It's Marty Zweig. That's the guy's name, folks. Okay. Did he have anything that was like this at the highs also, or is this just something that is at the lows? Meaning the ratio.
I don't know. He might have.
Okay.
I kind of picked this up over the years and stuff, and he was a brilliant man. He really understood how the market works.
Listen, man. I interviewed him at least 4 or 5 times, and it was so cool because he was always talking about. I can really understand now how he made really good money because he was always talking about ringing the bell. He always was saying to me, like when I was interviewing him, I wish I knew these things here. I didn't know some of this stuff that I know now, that's for sure. But he, was one of these guys, I'm going to ring the bell. That's it. You got to take the money. And I can see why, because these ratios, I love these ratios to do, but these ratios are where it's at, man. I mean, because it's you have something underlying that no one has, number one. And when you look at it fundamentally, to me, it fundamentally works. I mean, it makes sense because it's like it is the market. What you're looking at that is the real market. You know what I mean? So pretty cool.
Yeah. You're not looking at opinions. You're looking at actually facts. These are the facts of the market as they're developing, and you just got to learn how to read the facts.
Right.
And so,
where's the money? Where's it going in?
I'm thinking, go ahead. What would you say?
No, it's just exactly. Where's the money going? Is it going in or coming out?
Yeah.
Right.
Yeah, exactly right. Yeah. Where's the money going? And this is a good chart that, and McCullen oscillator thing too. It works on a bigger time frame, but it's similar to what this wag breast stress indicator, the McCullen oscillator.
It is.
Selling climax and a buying climax type thing.
Yeah.
Have a same thing, but on a smaller scale.
No, there's no doubt, man. No doubt.
So, here comes the music.
Here comes the music. Well, guess what? Tim Ward and Tom O'Brien, we're going to be right back, folks, okay? Because we're going to be bisecting and dissecting this market. And that S&P, so picture, folks, the S&P is only down 18. It was down 84, okay? This is going to be a rejection of lower price on lighter volume today, which is a total mind blower. Stay right there. Tim and I are coming right back. And don't forget, folks, you can get hold of Tim at ord-oracle.com. Tim and I come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Tigers, the inaugural session of Live Trading Fridays with Larry Pesavento was a massive success. Trades were communicated, questions were answered, and money was made. Every second and fourth Friday of the month, from 9 a.m. to noon Eastern Time, Larry wants you to join him as he places live trades and takes your questions. That's right, with this monthly subscription, you receive access to 2 live trading events. We are gearing up for the next session Friday, April 26th, so there's still time to sign up. For this month only, use code LarryLive at checkout in order to secure $50 off your monthly subscription price for as long as you subscribe to the service. We'll see you next Friday, April 26th, Tigers. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Dow Industrial's down 326, Nasdaq's off 78, S&Ps are off 20. And folks, as you come over to our website at TFNN, tomorrow we're here again, live trading with our man, Mr. Larry Pesavento. So if you go into featured content, you're going to see live trading Fridays with Larry. This is going to be tomorrow. Okay, 9 o'clock in the morning to noon. Larry did the first one 2 weeks ago. Bottom line, tomorrow morning, you want to be in, you want to trade live, you want to follow Larry, you want to make some money. Bottom line, come over to our website at TFNN, and you're going to see right on featured content. And then what you do when you're checking out, put live with Larry. And the promotion code and the bottom line, that'll bring that cost down to $250. So the whole live trading session starts tomorrow, folks, 9 o'clock. Check it out. You know, always dynamic, that's for sure. And you talk about volatility, and that's all us traders need volatility, and we have it. So you can take everything out of the middle. You know, that's what it comes down to. We're talking with our man, Mr. Tim Ord, and we are talking markets out here. So let's see. Okay, Tim, so I'm ready.
Let's go to chart 2.
Okay.
And really, we talked about the VIX before.
Yes.
And the VIX really, acceleration of the VIX really tells a big story. When you hear somebody, the VIX was up, 30% today.
Yeah.
Well, that's a real good sign because you accelerate into a low on the market. And the VIX, so you put a Bollinger Band on the VIX, and that's all it is. It's a VIX on the bottom window, and I got a Bollinger Band on it.
Okay.
And basically, the Bollinger Band, it's a 20-day moving average, and the upper Bollinger Band and the lower Bollinger Band are two deviations apart.
Yes.
So it measures, So the average is the middle line. That's a 20-day average. So when it gets 2 deviations above or below that line, usually if you're close, the market's gone too fast, too quick in one direction.
Right.
And so over the last, this is probably about 3 years, it's pretty rare to get a signal where the VIX hits it touches above the upper Bollinger Band. And I got them circled in red on the bottom chart there.
I see that,
so we had one. Yeah, we just had the last signal was just like last week.
Right.
And so the previous one was the October low, and one before that. And so that was like a good 6 months ago or better. Than previous one, but looks like about March of 2023 was another one. Then you had kind of 2 of them coming at, that top actually went down before it went up. Anyhow. So this is kind of an important signal. It's a pretty rare signal. So I'm thinking this is more than just a trading range. If you notice, all those blue lines going across the chart are when this indicator triggered. And if you notice, they all came at, except the ones back in 2022, but kind of a top there. But all of them bounced, and the last 2 of them were major lows.
Yeah,
so
I can see that.
And since we're in an uptrend now, not a sideways or a downtrend. So I'm thinking this ZBT we talked about on chart 1 could still get triggered here because this is kind of a rare signal for the VIX to hit this close above his upper Bollinger Band.
Okay.
So I'm thinking this is kind of an important signal. And,
yeah, I mean, we just
Go ahead, I'm sorry.
No, there's no doubt. What you just said last week, we're at 21 on the VIX, and today it exploded up, and all of a sudden now it's almost flat. We're at 15. So pretty wild.
Yeah. So this is a weekly time frame. This is not a daily. So,
yes.
But the weeklies had triggered in here. So the weeklies, the monthlies rule the dailies, or monthly rule the weeklies rule the dailies rule the hour, and all the way down.
Right.
So this is kind of an important signal. So. It's a significant signal that you're at least expecting a multi-week rally, if not longer. So, anyhow, I wanted to point that out. I thought that was important.
Yeah, for sure. No, I'm with you, man.
All right, so let's go to chart 3.
Okay.
And this is a VVIX.
Yes.
And I found which is a VIX of the VIX, and the VVIX actually. It's more responsive than the VIX. So the VVIX actually will turn up or down first before the VIX will.
Okay.
So I'm doing some work there. But anyhow, we got a signal on the VVIX. Actually, I do a lot of stuff with acceleration. The faster something goes, the closer it is to reversal.
Right.
So if the market is just creeping up slowly, it could go on for a long time. When it starts to go really fast, it's probably going parabolic, and it's due for a correction. Same with down.
Yes.
So if you want to have a pullback, you want to be fast and furious.
Right.
Because then you're knowing you're going into probably a climatic low. And this is kind of an indicator to measure that acceleration of the up and down. And I use the VIX, VVIX, because it works a little bit better than that. Because I tried it on the VIX, didn't work as good.
Okay.
But anyhow, so I measure the RSI, which is kind of an acceleration indicator. I use it for the VIX, just a 14-day period. And also I use the 3-period rate of change for the VIX. And at this last low, actually this one kicked in on the 18th. The bottom was the 19th. And so this is kicked in too. And it doesn't give a lot of signals, but you may get, not one every month, but you may get one every couple of months. So it's kind of another reason why I don't think this is just a pop in the down, or this is start of a downtrend. I think, it's the start of another uptrend.
Yes.
Because these signals are kind of rare. And matter of fact, if you look at early 2024, that red line in there, it can actually happen in a uptrend. And so I just put that in there. So
I see that.
Yeah, I think it's something important here that this rally's, since a couple of indicators kicked in on the weekly charts, I think it's something intermediate term wise. So
no, well, you can see today's action, Tim. I mean, Facebook came out with numbers. The numbers were all right, but yet what he was going to spend in the future, that's what tanked the market last night. But you can see this S&P, we were down 84, now you're only down 24. It's like, really? And, the volume is not that heavy, man. So it's going to get intriguing. We got Microsoft and we have Google coming out with numbers at 4 o'clock. So that's going to move the S&Ps and the NDX for sure. So, but
hopefully then that ZBT will kick in by next Wednesday. That'd be nice.
Oh man, let me tell you, we're going to be partying.
Yeah, going to be partying. That's right. So we got chart. The music's going to come back on here. But I got a couple of things to come over on the gold issues. I think everybody will want to hear it. So
we're going to want to hear it because these gold stocks are taking off like a rocket ship. Newmont came out with their numbers, Tim. They were huge numbers. Newmont's up over 12%. And of course, all the rest of the gold stocks are going with it big time. Stay right there, folks. Tim and I are coming right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Tim O'Brien, Tom O'Brien. We do appreciate you growling and prowling with us. Tim, we're going to take a call here. We got our man Costa from Boston. Costa, what's going on, brother?
Right. What's going on? I'm here. Can't put today, Tommy.
Yeah, you're having a good day today, Costa.
Newmont went through the roof.
I know, I like it. We're having a hard time hearing you, though. But so you want to look at BMI, right? BMY?
BMY, Bristol Myers. Where's the entry point?
$40. You're at 44, so it's an ABC down. So Bristol Myers is getting smoked out here today, folks. And you're going to make sure that the volume dies down on you. You're down 10% today. This is an ABC down to $40. Now, what you also have at the bottom of this consolidation, I mean, you know how this thing works, Costa. You just make sure that, you know, the volume dies on the vine when it's going down and try to test this $40 area. I expect it's going to do it because you're breaking the lows. You're doing it with volume. You know, the low of the consolidation is 42, but I expect this thing's going to go to 40, man. And then what happens is that it does have a lot of strength going all the way back. This is going to bring you back actually to 2012. That's where it broke topside from. So bottom line is that 12 years later, it's coming back to test that whole breakout area.
Okay, Tommy, thank you.
You have a great one and a safe one, man. And we're talking with our man, Mr. Tim Ord. Tim, I have the chart I have up right now is number 3.
All right, flip to chart 4.
Okay, there we go.
Yeah, this is we keep showing this chart, and I think the bottom's already in, and these are momentum charts. It doesn't really try to catch the bottom,
yes,
or try to catch the top, but tries to catch you where the trend is. So you really, after you get a bicycle, you want these trend charts to kick in.
Okay.
And the monthly right now still has not. If the bottom window is still below the Bollinger Band, which is the up-down volume. The next one up is the advanced decline. It's right at the mid Bollinger Band. To get a bicycle, you need to close above it. But what I wanted to talk about is the monthly GDX-GLD ratio.
Okay.
This is the ratio that you want to turn up. That's when GDX is outperforming GLD, which is gold.
Yes.
And you want gold stocks to outperform gold, and that's what happens in uptrends. If you've ever looked at all the way back, fathers, you want, when this ratio is rising, then gold stocks are outperforming gold, and that's what happens in bull markets. And I got it circled in red there over to the left where we are right now. And Bollinger Band, mid-Bollinger Band's at 0.16, and GDX-G-roll ratio is 0.16. So this one may kick in by month. It's actually a monthly chart, so you have to wait until month end, which is next Tuesday.
You know what's so cool about that, Tim, is today this ratio is going to go up today, man, because gold's only up $7, and these stocks are up 5% to 10%. So this is cool, man.
Yeah, matter of fact, GDX is up almost 4%. Putting this update on, so this could kick in this month. So, but the other ones will eventually kick in, but they have a net. So let's flip to chart 5, which is the weekly chart.
Yes.
So we showed this chart last time, and actually it's been on a buy signal for I think the last week, and it's still on a buy signal. And these signals, once they cross, I got years when the previous signals. So when it does cross, the last one we had in 2023 actually failed, which is those two red lines there.
Right.
And the weekly can fail. Usually the monthlies don't. Usually the weeklies don't either. But every once in a while it gives a whipsaw. But they don't give really two whipsaws in a row. So I think once this kicks in, it's going to stay in. So in my opinion, previous rallies of this type have lasted a year and a half, and that's usually at a minimum, and sometimes they go 4 years, which we've gone down pretty much 4 years. In other words, the last 4 years, the advanced decline and up-down volume for GDX was basically nil. There was no power to it. So if this turns up, most gold stocks are going to do really well.
Right.
And it's turning up right now. So what does that mean? Let's go to chart 6.
Okay.
And, so anyhow, the blue area, when this weeklies turn up, you could expect something similar to what happened in 2016, which is kind of left of the chart there. I got 16 months up.
Because that was the best run that we've had since the beginning of 2000. Of course, we had the run, but 2016 was a monster one, right? Yeah.
Yeah, it was coming off of, this was a 2019, I guess, signal where they had the COVID crash in there.
Oh, yeah.
That didn't seem to affect the signal. Probably should have gone back faster and back longer and looked at that 2016 bottom. But, that rally in 2019 lasted, over a year, 16 months.
Yep.
And so when this weekly chart turns up, this will imply something similar to what happened in 2019 to 2020. And what that means is that the up-down volume advanced decline indicator, which is all this blue stuff, is above zero. And that means if you got volume going into these gold stocks, up volume compared to down volume, you got a big rally going on. And so I'm thinking this is still very early in the rally.
Yes.
If you look on the top window is the GDX, and I got that dotted red line going across there.
Yes.
And we're if you notice, we're right smack at that line right now.
Oh, look at that. Yeah, right. Cool.
So what's supposed to happen, according to Weisskopf, what's supposed to happen at those trend lines? You're supposed to see a sign of strength.
Yes.
Well, if you go down to the bottom window, this thing's actually still going up, even though the GDX over the last, couple of weeks or so has gone virtually nowhere, and that up-down volume is still accelerating.
Right.
So what's probably going to go on here is a sign of strength right through that line. So this indicator suggests that things are not getting weaker; they're actually still getting stronger, and most likely you'll have Weisskopf sign of strength through that dotted line.
And a sign of strength, folks.
We're going to go on for another year and a half.
And a sign of strength, folks, is wide price spread, accelerated volume. And if you have to look at it twice and think, is it a sign of strength or not, that means it's not. Because even if you don't understand technicals, when you see a sign of strength, man, go look at Newmont today. Newmont is a sign of strength. Yeah.
Yeah. So anyhow, that's what's probably coming down the pike. So I'm thinking the low of 2022, that October, I think was a major low. That was ahead of a Head and Shoulders bottom.
Yeah.
And we've been screwing around with this neckline. Right now we're right smack at it. So either we go through it, which the bottom window of this indicator suggests that we will, and that probably we'll have some sort of a surge, maybe, I don't know, to 40 or something. I don't know what it'll go to, but this market is not done yet. It's still, if this indicator is close to zero or going down as we're screwing around with that line, that dotted line, then I'm thinking, we're not going to break through it. But it's doing the opposite. We're accelerating. So
I love it.
It's going to get stronger short term.
I love it. Tim, it's always a pleasure. You have a great weekend, a safe weekend. We look forward to speaking to you next Tuesday, and we look forward to riding this market, man.
All right.
Have a great one. Stay right there, folks. Come right back.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow Industrial's down 397, Nasdaq's off 110, S&Ps are off 29, and the NQs are down 118. So after the close, folks, it's going to be wild, no doubt, because you have Microsoft as well as Google coming out with numbers. There's a lot more than that, but those two in itself, because of their heavy weighting inside the NDX 100, that is going to move that NDX 100 in a monster way. So let's go take a look at the Qs. If I bring the Qs up here. Okay, so we take a look at the Qs. And so the Qs did 47 million. You're going into the high of the low was 422.75. That was 75 million. So what you have here, you get a rejection of the highs of the lows. So that's saying that the Qs still want to go higher. Now, let's go to Microsoft, because this is a hard one to right now to really figure out what's going on, because they're selling the thing off. It came back $10 today. Went down to 388. It's 399. You can see that expansion of volume. See, the expansion of volume is dicey, man, because that's a daily ABC down. And you got 430, yeah, it's a 34.8 to B, which ends up with a 480 or something, 380. So this is a tough one, man. That's saying to me that, okay, you can get to that 380. Now, that's not the end of the world, but if we go to Google, let's go take a look at this. I'm going to take a look at Google. Google flat out rejected 152. They're at 157. Anything, see the way this we were, anything above 151, and it looks to me like it wants to stay above 151, even 155. So if I were a gambling man, which I am, I would say that you're going to have Microsoft have a little hard time and Google is not, and so you're going to probably have the yin and the yang, and you're probably going to stay flat. And we're going to know, guess what, in 5 minutes. Have a great one, folks. Have a safe one. Come back and visit Tommy tomorrow morning, 9 o'clock. Come right back, folks.